Nick and his partner, Zach, were managing about 2.6 billion, and the British regulator was giving them grief. The two of them looked at each other and said, we have more money than we ever thought we'd have. And they said, why don't we just return all the money and we can then invest our money the way we want and no regulator is going to tell us anything. Nick put his money in these three stocks. I think if you calculate it from 2014 till now, he beat everybody. Nick forgot something. He forgot something known as escape velocity. Then we have my friend Nick Sleep. Some of you have heard of him. How many of you have heard of Nick Sleep? We have some Nick Sleep fans here, more than Value Investors Club fans, which is good. So Nick and his partner, Zach, were managing about 2.6 billion about, I think maybe 10, 12 years ago. And they're based in the UK, in London. And the British regulator was giving them grief, saying, you are too concentrated. You need to be diversified. And like I just said, that 70% should be in two stocks. Well, the British regulators don't believe that at all. They were telling them that, you need to kind of broadly diversify the portfolio. The two of them looked at each other and said, we have more money than we ever thought we'd have. We are richer than we ever thought we'd be. I'm guessing they had a couple of $100 million each. And they said, why don't we just return all the money and we can then invest our money the way we want and no regulator is going to tell us anything. They said, what a great idea. So they wrote a letter to their partner saying, we had a great run, great ride, and we're returning all your capital. Nick told his investors that my own money, I'm putting 1/3 into Amazon, 1/3 into Costco, and 1/3 into Berkshire Hathaway. And my suggestion for all of you is that when we return you the money, do exactly the same thing. And the good news is you don't need to pay anyone any fees anymore. And warm regards, okay? And I get a panicked call from an endowment in the US telling me, did you hear that Nick is returning all the money? I said, yeah, but he also told you what to do. So they said, yes, but we're not allowed to buy individual stocks. In our endowment, we have a rule, we can give the money to outside managers, but we can't buy individual stocks. So I said, let me just get this straight. I can set up a fund with the three holdings, and then you can invest and you can pay me 2 and 20, and that's okay. He said, yeah, that would work. So I just want to let you know the way the world works, Nick put his money in these three stocks. I think if you calculate it from 2014 till now, he beat everybody. He's riding motorcycles in China and he's racing cars in Japan and whatever else he's doing, not looking at his portfolio. But what happened is that after 2014, Amazon took off a lot more than the other two. And Amazon became 80% of the pie. Nick forgot something. So one of the things I need to add to the mental models is he forgot something known as escape velocity. Once we get escape velocity, it doesn't matter if one stock is really high portion. So he had 200 million, 67 million went into each of these three. I think if he just let it run till today, it's over $1 billion. Okay, so how does it matter if 800 million is in one stock and the 100 million in the other two each? Because even at 200 million, he had escape velocity, right? So it didn't matter. But what happened is he forgot this. No one talked to him. He hadn't attended his lecture and so on. And so he takes his Amazon position and sells half of it. And he buys what I think is a useless company called ASOS. I actually told him that. I said, you could have asked me, I would have told you it's useless. So anyway, he buys this company ASOS, which none of you have ever heard of, for very good reasons. ASOS, of course, goes nowhere. But even with the inefficiency of doing that, he still beat everybody. And then, Nick loves this book, Zen and the Art of Motorcycle Maintenance. How many of you have read the book? Oh my God, we got some heavy-duty fans here. Let me just tell you that it's difficult to get past the first 3 pages. And it's really difficult to get past the ghost. Once the ghost shows up, that's it. A lot of you are going to give up. But what I would suggest to you is that even though it's going to be really, really hard to read the book, please read the book. And the first time you read it, it will make no sense to you. Then read it one more time. And then you'll start to understand that basically the important thing over that book, which is reflected in those 3 companies, is you pursue the highest levels of quality in the businesses that you're investing in. And the highest level of quality in these businesses in terms of the management and the moats and how they do their business and all that is going to get you to the promised land. When we look at these three companies, they have those attributes. And so that's kind of where we need to be.